I'm Ron DeLegge with ETFGuide.com. We're pleased to have with us Chris Johnson with the Knight Capital. Chris, great to catch up with you.
Thanks, Ron. Appreciate you having me here.
I want to talk with you a little bit about the different types of market orders that retail investors have at their disposal. There's some that they may want to avoid. Talk a little bit about that.
Sure. When thinking about trading an ETF as a retail investor, your options, typically tend to be standard agency order types, and what I mean by that is things like market orders, limit orders, stop loss orders, and stops can also come with a limit on the back of them as well. Typically, again, given the nature of the ETF and the way it trades, and maybe some concerns around perceived liquidity, we would recommend that most investors use either a limit order or a stop with a limit, tending not to use just a market order or a stop on its own. And there are a variety of reasons for that.
And does that apply to both purchases as well as sales of an ETF?
It does, in both direction, either direction. You really want to do, to the extent you can, control the price you're willing to pay, and the way you do that is by putting a limit on it.
Okay, very good. One last question. What about the timing of the actual ETF order? Does that make a difference at all?
It does. It's a great question. I'm glad you raised it. I think a couple of things to think about. Think about the underlying securities that comprise the ETF that you're trying to trade, and think about when those securities are either open or close to their opening, or around, they're actually trading in the market so that there's transparency to the prices. So, for example, if you're trading an ETF with European market exposure in equities, you certainly don't want to be trading that in the afternoon in the US to the extent you can help it, because the European markets are already closed. Therefore, people are building in a bit of a risk premium into the spread of the ETF in the afternoon. So you're better off trading that between sort of market open in the US and around 11 a.m.
That's good advice, and probably also applies to those of you that trade commodity ETFs and coinciding those trades when those commodity markets are open.
That's exactly right. So therein you're probably between sort of 10 a.m. and 2 p.m. in the US.
Perfect. Chris, thanks for joining us.
Hey, thanks for having me.